Welcome all of you to our midday review, and I like to review two patterns from our chart patterns book. So I'm going to move to PowerPoint and show you exactly how these two patterns can help us make money from the markets. So I'm going to show you today, right now, one reversal and one continuation pattern, okay? One reversal and one continuation pattern. Now, the reversal pattern that I have in mind is that can make you a lot of money is none other than you all guessed it, it's a rounding bottom pattern. Rounding bottom, it starts off in a downtrend, it goes into a sideways, and then the whole stock makes a totally trend change and a rebound. So how do we trade a stock like that? Firstly, okay, when it is in a downtrend, and you know it's in a downtrend by looking at the highs are lower than the previous high. The low is lower than the previous low. So honestly, one shouldn't be touching a stock like that, because you cannot make money from a downtrend. In Malaysia, it's a one-way ticket. We only can make money if the stock rises after you buy. So if after buying the stock goes down, you're going to lose money. And the charts will tell you whether it is in a downtrend or uptrend. In this case, it's a downtrend. Do not touch this stock when it is also in a sideways trend, because you cannot make much money. You may make a little bit, but it comes back down again. And the trouble is, you tie up your money. If you invest into a sideways market, and it could go on for years, like JHM, before they start to break up. So we would like, because we want to put our money into stocks that move very fast. And the way to do that is to look for this stretch on the right hand side of this diagram, and that is stocks that are breaking up. Okay, that means they make a higher high and they make a higher low. And there are two ways, the techniques, or the two techniques that the pros use in order before buying, and that is once they are on an uptrend to buy on the breakout, or after breaking out it's too high, they want to wait for the pullback and they buy on a pullback. So there are only two ways to buy. The buy and breakup method is as follows. See this? I circle it for you already. It's a buy there because it's a breakout, second buy, and the third buy. Now if you miss that, or if you think it's too high, you want to buy on a pullback, you wait for the pullback. So when it pulls back, then you buy now. In our TAD, we teach you about 5 conditions you must fulfill before you enter a buy on pullback. Now, so let me recap. So on the left hand side, when it's coming down, do not trade at all. Don't trade here, don't trade here, trade here, trade here. Okay, now the patterns to look for, and you use chart pattern analysis to do that, is a beautiful rounding. This is perhaps the most important of all reversal patterns. I can show you chart after chart after chart in our KLSE that has this reversal pattern, bullish reversal. Now, having already identified that they are on the right hand side of this rounding bottom, then you go in to buy. But there are many times that it's going to give us a buy signal and a further buy and a further buy, further buy. And so in order to detect that when it's giving us another buy and a further buy and take profit and then pull back and buy again and take profit and then pull back, buy again, we use system number 2, which is a computerized trading system. We call it TAD. We have formulated our own TAD trading system, which is rides on SI Station, which is a software designed by Singapore Press Holdings Singapore. Okay, and together it can help us to run through all 1,700 stocks. We got a lot of stocks in our KLSE, but in order to pick which stocks can go up, assuming as you do it manually, page by page, it'll take you maybe 7 hours, one whole night, in order to pick what are the stocks that are going up tomorrow. But with the computerization, with technology, we can do that within a minute. And I'm going to show you.
Now, before we go through that, Mr. Fred, many of the traders, I think if you're born in, those who already trade in this local stock market 20 years ago, the way the computer and 20 years ago is different. I believe, Mr. Fred, that you have to do manual calculation.
Yeah,
you have
and,
to to draw by yourself. How hard it does.
Yeah, see, and
It's not easy.
there wasn't anything like that to a scanner that was able to scan automatically all the stocks and give you what the stocks to buy until just a couple of years ago when SI Station introduced Bursa Station, and now we are on SI Station. Now, SI Station, both of them belongs to the same company.
Right.
They developed the same thing. Well, the difference between the two is the SI Station allow you to scan based on our criteria, and our criteria is just quite straightforward. TAD, which turtle, atom, and ducks, and I'll demonstrate to you how we do it. Before that, when technology was not so good, there was no ability to scan, so we need to. It's semi-automatic. I wouldn't say fully manual.
Fully manual.
The systems, the trading indicators are already there,
Right.
but there is no feature whereby you can consolidate, jigsaw all these indicators together and do one screen. You have to do multiple screens and then combine. Anyway, so with technology, it's now
Our life
everything can
much
be
easier.
very fast. Yeah? Very fast.
Yeah.
So let's just continue. So those of you who are keen to know more about this pattern, that's the book to pick up. You could pick up from my bookstore, which is fredtambookstore.com. Now, so one of the patterns you look for in every stock is to look for a rounding bottom, also known as a saucer bottom, also known as a frying pan bottom, or a quali bottom, or a
Mangkok.
mangkok.
Quali.
A quali, a mangkok,
Quali.
right? It is basically just this, yeah?
Yeah.
And you're looking at Hevia. You're looking at Hevia that is
Right.
already, 2006, it came down all the way to 2009 to 2014. Notice it went sideways for like 4 or 5 years, and then from 2014 it started to rally. It broke through the old high in 2015 and then went on to make a new high.
It's fantastic.
And so now I have categorized stocks into different stages of the bull run. So the first one is the baby bull. All right. So the baby bull is when you try to catch the stock way before it goes right to the top. So it is quite near the bottom. If you can catch baby bull stocks, they are obviously the best buys because they are the lowest price. Are there any baby bulls still with this stock market uptrend? Yes, there are.
They are.
We have identified them. If you want to know more, then you contact one of our staff, and we'll be able to help you out there.
Yeah, as you can see on the screen as well, we have down there, as you can see on the layer on the screen, we have our number is 019-220-2022 for you to call our head customer support and customer care if you would like to know more about the stocks that is baby bull.
Okay, but I don't know. Other than the next step after the baby bull is what we call the young bull. And if you can catch a stock over there, it's still good. It's still very good. After I show you some of our stocks that are in the baby and the young bull stage.
Lovely.
And the third stage is when they break out of a historic high. That was an old high.
Okay.
And let me say this: to know an old high, you need a 5 to the 10 years chart. And that's why, for those of you, if you have a charting system that is less than 5 years, it's incomplete.
It's incomplete. Definitely.
Now, in the SI Station and a good software, you should have its whole history. Okay. Come back to this. So a dark bull is breaking out. So this is still good. And lastly, if you fail to catch that, and it is like already somewhere above the old high, it's called an old bull. I call it an old bull. But can it still go up further? The answer is can, right? But yet it is dangerous. I want to add that if you are buying a stock that is in an old bull stage, the probability of it going down is higher, and so one has to be careful. And the way to handle it is to use. Also, we teach that in class. We call it a 1-2 cha-cha-cha, or we call it the fast turtle rule, or Japanese candlestick. Japanese candlesticks. I have written a book on that. It is published by John Wiley. You can see on my left, And it has there are 7 popular patterns that can tell you the market or the stock is toppish, and please get out. I'll just show you that the practical example of these stocks in different stages of their bull run. Dufu, I mentioned this last Thursday we had a webinar.
Yep, sure.
And I used Dufu as an example, yeah. And even as I speak today, right now, Dufu is actually going up, going up.
Yep.
So now I want to show you baby bull. Now, if you knew us earlier, if you have the chart earlier, if you knew about chart patterns earlier, you would have bought a Dufu in 2015.
Yep.
Because in 2015 we did make a rally, rally, and you would have caught that. But they pulled back, just as much, but rebounded again, right? And on this stretch, you make, if you don't run fast, you couldn't make it, you lose back, but it continued to go up. And the next stage of his run, we call it, is the young bull. And how to draw it, there are ways to draw it, it is illustrated in the book. You connect high to high, and if it breaks the resistance, you buy. So we have a young bull here. Then if you failed to capture this stock in a young bull stage, then it's the adult bull. Adult bull just broken out of the old high, and this is Dufu. This is not heavier, but it looks like heavier, isn't it? So you see patterns are similar, whereas the stock could be a different stock, different sector, different management, different shareholding. Some are light bus, some are heavy bus, and yet they behave the same. Why is it so? Why is it so? Because they're played by the same smart money, the same syndicates, the same jurongs. So they have the same psychology behind them, psychology of greed and fear and hope and so on. Now, and if you fail to get into the adult bull level, you still could chase this, which is what it's right now at Dufu. And can it go up higher? Well, today has proven that. In fact, it went up higher today. This is a chart that I did last week. It's not the current chart. Notice my targets there. These targets are estimates. I use another theory to help me to project the targeting. All right, and if you come to our course, this will be revealed to you how we measure what is the target, the next target. And if it hits 154, then the next target is 173. I believe it right now is 148, something like, that Dufu. Okay, so now let's apply that to Orion. Is that a good start? You've been calling a buy. Tell us how you call a buy an Orion.
So this is quite interesting about Orion. If you guys can see on the chart right here, so I'm actually a big fans of catching the baby bulls and the young bulls, and the best thing is actually learning with Mr. Fred is actually understanding the chart pattern. As you can see on this book right here in front of you, this book is really helping me a lot. Now, when we see the formation about, the saucer is just about to form. Now, the best part right here is actually when you see it start to forming the rounding bottom, as it start to gradually going up high, it start to creating a higher low. As you can see, the angle start to moving up high. I would love to see this chart when the volumes start to start to coming in. As you can see right now on the screen, Orion's volume is really spiking in this section right here. So we know that there's a smart money already coming in. So we decided on at the coaching time, we're entering in.
Hold on. Do you mean to say over here?
Exactly. Exactly the baby bull side.
You intend to tell us that actually you spotted the baby bull here because of the spike in the volume? Right? That was the first buy. And we got students who actually bought. So it's not just theory that we are talking about. Many of our students have put some money into this pattern. And so here's another. The next round, if you fail to catch the 24 area, then the next area will be 34. And today, it is right there at the young booth,
415.
the other stage. Now, right now it hit the resistance and it pulled back a little bit. It's important. If it can break through and go above, let's say 42, 43, all right, then the next target should be 50, and then subsequently 73 cents. So all based on technical analysis, I might add. So let's move on to the next stock. Okay, that target, potential target, is 73 cents. Now another one, beautiful stock. Also, we picked this up the last webinar, which is last Thursday, and another rounding. Notice the baby bull stage was here. 2017, the beginning of this year, then it went sideways. It went sideways for a while. So for those who are not patient, of course, you will miss that. and this is the trouble. Even I say this for some of my students, after buying, they want it to go up immediately. Yeah, but there are times like in this example, it doesn't. So you shouldn't sell because there's no sell signal. Because to sell, there must be 3 arrows pointing down. Just one arrow is not good enough, yeah? There must be 3 arrows. Okay, there was a sell and you bought back here. You would have bought back here all the way up.
So you see, one of the big mistakes right here as a trader that we always see, Mr. Fred, is they're not patient enough. They feel like they want to be quick. Today I just buy these stocks and I wish these stocks can fly 20%. It's immediate by today.
I don't blame them because every trader has got a limited amount of money.
Right.
It's not that their pocket is bottomless. If their pocket is bottomless, they can afford to hold.
Right.
But because they want to utilize their money into the best possible way, the fastest possible way, most profitable way. So they need to buy a stock that move. So when they don't move, what I suggest is, by all means switch out. But when they start moving, you must switch back in again.
Okay. For the chart pattern is very interesting to learn.
Yeah, because by charts, they really give you, they tell you when it's breaking out.
Right.
And we call it a momentum trade as well. And when it breaks out, the chances of it moving up in the next couple of candles is very high. All right. Whereas the pullback trade, the advantage of pullback trade is you can get you to buy a lower price, but you don't know when it's going to bounce. That's it. Like hibiscus, they're slow, but you get it cheap. You know what I'm saying? So you kind of have the cake and eat it, Just coming back to this.
Yep.
Right. So we got Menang and then AYS. AYS. So beautiful. This one. Baby bull stage is here. Okay, the young bull stage is here and the adult bull stage is there. Alright, so there's another potential stock. Now, so I have a few more, but like Pre-Star, which I already just now demonstrated to you. Right. So if you want a further list of our rounding stocks, rounding bottom stock, please do contact one of our staff, and as well as the number that you see at the bottom.
Okay. You can see at the bottom.
All right.
Yep.
Now I'm going to talk about, if we have some time, very quickly on the continuation pattern. After they reverse, they will keep going up, and there are certain patterns that tell you that the trend is going to continue. And I'm going to show. I'm going to share with you right today the triangles and the flags and the pennant. So the first one is what we call a triangle, symmetrical triangle, where after it's gone up for a while, it will consolidate sideways and then they break out. You saw in Pre-Star, you saw in AWC just now at the beginning of this web live, Facebook live. Pattern number 2. This is a very short-term consolidation pattern, which lasts about 4 to 9 days, as opposed to triangles. They last from 3 weeks to 3 months. Triangles are take longer time to form, but once they break out, they are powerful. Because of the length of time they move sideways, once they break out, they pack that much power. Whereas the flag is a 4 to 9 days sideways pattern due to smart money, syndicates, after pushing, they take a rest. And there's some people who made the money, they profit take. So this is not a trend reversal, just some profit taking. That means very bullish, and we look for the breakout, and we'll buy on breakout. So this is a flag is one of them. The other one is a pennant. Okay, so it is like a triangle, but it is 4 to 9 days. I'll just give you an example, right? Dufu. Now this is Dufu, but on the right hand side. If you look at the 10 years chart of Dufu, it's a rounding bottom. Whereas if you look at just this last 1 year, they actually climbing up, I would say, Mount Kinabalu, and they are now on the last stretch. Very profitable, but very dangerous. You stay in Kota Kinabalu.
Yes, I am.
You look at the gunung every day, and and you've seen people climbing up, you've seen people falling down. You know the danger. So there is a danger when it comes to trading a stock that is climbing like that. I might want to add, because I don't want people to get the impression that all the stocks are hunky-dory, are fantastic. They might be, but when they start to fall, you must know and you must get out of it. Again, we use the 1 2 cha-cha-cha, or what we call the fast turtle rule, and all the Japanese candlesticks. Come back to here. See, That's a triangle breakout here, and triangle breakout here. There are two areas of breaking out.
Beautiful.
And in between the two triangles are flags and pendants. See how many flags and pendants there are, okay, in a bull run. This is a bull run. There's no doubt about it. Those of you who still think that our market is bearish, think again. Look at this stock. You're not going to argue with the smart money. The smart money is pushing it out. I mean, if you're not in, you just lost the opportunity. So that's pure and simple. Well, you said, well, the fundamentals are very bearish. Well, but they are reflected in the charts. If it is so bearish, why are the smart money pushing it up? There are other good fundamentals here on this stock that is pushing it up. Okay, Iris. Here's another one, rounding bottom, and in this example, I wanted to show you flags only. Okay, that's why you see I call it Jurong's big fist. Makan, then they rest. Then makan, then they rest. So I said, look for another Jurong fest. Today, it didn't move up. So you wait for it to move with high volume, and then you go in. Right now, not yet, yeah? And I think last but not least, Micron. This is beautiful. Today actually it's moved up so much. Today, Micron, beautiful stock. The Edge, Dato Tong's portfolio also featured this, I might add. All right, and so FA, he's done a lot of work on that, and I do respect him highly for this FA analysis of all these stocks in his portfolio, and Micron is one of them. Fantastic. It's symmetrical triangle breakout with an up gap on high volume. Unmistakable. Oh yeah, AWC, okay, which I explained earlier already. So there is breakout on triangle here and a pre-star. Okay, I managed to put the other two stocks inside here. So that's these are all the stocks that I have time to share with you. But I'm sure there are many others. So what I wanted to do now is
we have a lot of comments.
A lot of comments.
Yeah, guys. So
okay, somebody wants to know more about some of your stocks. Yeah. Okay, can I just go straight into there?
So before we go through that, try to type in your comment box right here what exactly the stocks that you want to watch. Okay. You want us to watch? We can give a quick comment. We'll try to pull out. So let's give a comment number one, DNEX. So they'd like Mr. Fred to comment a little bit on the DNEX. But anyway, Mr. Fred would like to expand a little bit.
Right. So just to let you know that the system that we're using is basically that, TAD. Yep. Okay. To buy, there should be three arrows pointing up called Turtle, Atom, and Duck. So example in JHM, why we call a buy here? Okay, in April 22nd last year at 53 cents, because the turtle, the atom, and the duck, all three arrows up. Every time there's a three arrow up, we just keep on buying and buying and buying. And there are stop losses also. If it does come down and it goes below one of our three levels of stops, we are out of the stock.